surprised were you, and what do you make of the policy?
Well, I wouldn't say I was totally taken aback, because if you remember, the Citizens Monetary Policy Committee also voted with a very narrow 3-2, with the chairman casting vote, saying that I think the Reserve Bank should pause, but I have a feeling they are going to hike. So really, the market was in that sense divided, though our CNBC-TV18 poll of economists had indicated that it's a 90% factoring in of a rate hike. Honestly, I would say that the situation was such that you could justify both. So first of all, you have to say that this is very positive for borrowers. Once you know that this is the worst it can get, then people who are planning to buy a car or a house perhaps will quicken their decision, because now you know exactly what is your downside, or what is the amount, your EMI. You won't have a nasty shock in terms of an EMI, at least for the foreseeable future. Another cycle can always start much later. Now, normally when people call a pause, the economists do that, or rather the policymakers do that, because growth is getting impacted. Now, here the surprise is they've actually upped the growth forecast. Though, of course, they made it very clear the growth is still lower than last year. Last year, that is FY23, was 7%. This year it's going to be 6.5%, but their earlier forecast was 6.4%. The RBI seems to have factored in lower crude prices, although at the moment OPEC has ensured that market prices are higher. The Reserve Bank's annual average for FY23 was $95. Their expected annual average for the current year is $85. So that is one reason why they're expecting the growth may be a little higher. And then, of course, services exports is another positive they pointed out too. The inflation forecast for the fourth quarter is the big surprise. Surprise in the sense, last time when they forecast for Jan, Feb, March, they had said it would be 5.6. Now they've brought it down to 5.2. Totally arithmetic, because in the Q4 that just went by, there was a very high, an ugly surprise in inflation. Because of that base effect, they have brought down the Q4 inflation. It's totally arithmetic, and it looks like that is one good reason to pause. If the terminal inflation for the year is 5.2, then 6.5 is a good 130 basis point of positive real rate. All this is arithmetic. What is the real takeaway for the market? They are happy that at the moment this growth gets a little bit of a leg up because the cost of capital doesn't arise. Economists whom we spoke to are not raising their growth forecast and are not changing their inflation forecast. The other, of course, outlier point is that you can take a loan via UPI. That, I think, is another equally important decision. It might take away a little bit of business from credit cards.
All right, Latha, many thanks for joining.